My name's Brian Coester. I'm CEO of Real Estate Connection.
Hello, everybody. I'm Vince Parlove.
Hi, I'm Chris Heller.
So, and listen, I was really happy, Brian, when you asked me to moderate this, and I found out that you and Chris were on here. No secret that this team here is not new to the financial markets and the real estate world. So, maybe one of the things that we can do is just start out here. And I mean, Chris, you can go first. What are you seeing? Tell everybody what you're seeing out there and what's going on in the world of real estate right now.
Yeah, I don't know that I'm going to say anything that's going to be a surprise to anyone. The market's shifting. We're seeing the velocity slow down, inventory in some markets starting to build, and that's the first stage when you have an adjustment or the cycle start to go into a new phase. As a result, then people have to do things differently, right? As agents are having to change their tactics, change their strategies, change the conversations and the education and the expectation they're doing with consumers. Lenders, obviously, several months ago had to pivot from, focusing on printing money with tremendous refinance opportunities to focusing on the purchase business. And those are the things that are happening. We'll continue, I think, throughout the year. The trend will continue. Next year will be more of a reset or readjustment, and then we'll be in a different market dynamic than we have been.
Yeah, we're out here in Michigan. We're not hearing, there's not 15 offers over, 3 cash offers, then 12 offers over asking price and things like that. Brian, what are you seeing?
Well, to kind of piggyback on what Chris said, the last year has been a struggle for buyers, been great for lenders on the refinance side, but then all of that has sort of come to an end in the last 60 days or so with both rates going up, and then you're starting to see inventory come back, right? And that inventory coming back is sort of a combination of interest rates rising and people kind of taking a pause, as well as just general inventory, and the fact that sellers have seen quite an appreciation over the last year and a half, 2 years, 3 years, and are sitting on some equity, and they know that this market's not going to rise to the top forever. So you're seeing a lot of people recognize, okay, well, rates are going higher, the market's going to kind of top out in most of these areas. It's a good time to cash out and take that money that we've gotten in the appreciation. And then that kind of sort of combination, you really have some people shifting their models. You're seeing a lot of lenders, you see the announcements with the layoffs, right, where they're now starting to let go of a significant number of their staff. You're seeing lenders trying to get into the purchase market, and Chris, Vince, and myself, we talk about that a little bit, kind of all the things that we see over there. And then people are generally scrambling, and Vince, you're in a unique position at United Wholesale to speak to the lender loan officer side as well. I mean, what are you seeing on the lending side?
Yeah, what we're seeing is the folks that have been in this business for a while, and that knew this was coming, were able to prep a little more, right? They knew that the refis were going to dwindle and got to that purchase focus, a little bit earlier than the folks that are, somewhat struggling with it now. And that's if you're just waking up today and saying, boy, I got to get into that purchase, find some referral partners and stuff, you're probably 3 months behind the curve, right? It's probably segues nicely into, Chris, I know that you consult with a lot of folks and things of that nature. It's just like, the folks that have said, hey, to their teams on the real estate side, you guys, this is coming. We got to learn how to sell. We got to go in there and learn how to, take multiple offers. Homes aren't just going to be listed for, heck, in some cases, not even listed, right? But 2, 4, 8 hours, max 24 hours. I mean, maybe segue into this, Chris, maybe speak to how, you're consulting some people over how to make that change as well.
Yeah, so there's two pieces to it. There's one is people that have been through this before, and then there's the other piece of people who haven't. So any agent who's been in the business for less than 10 years has only experienced one type of market, and that's an appreciating market, or a market where the seller has more leverage, and a market where buyers have a lot of urgency. Now that changes, that gets flipped. And so as agents, the jobs we do are the same, right? We're still helping people buy and sell homes, but the conversations we have and the education we have change significantly. So I'll give you an example. If we're talking to a seller now, we're now having conversations about what it means to price the home correctly, and pricing below the market instead of ahead of the market. In making sure that we don't get in a situation where we're chasing the market or having a home sit for extended period of time to where it becomes harder to sell, or ultimately ends up selling for less than it should have if it were priced right. On buyers, we're having conversations now about creating urgency and having conversations with them, really taking a hard look at what are their plans. How long are you going to be in this home? A good friend of mine who's relocating said, "Gosh, Chris, I don't know if I should buy it." I said, "Well, how long are you gonna be in this house?" He goes, "Oh, this is, my kids are just getting into elementary school. We're gonna be there till they're out of school." I said, "Then if you find a house you love and you can afford it, you should buy it, because 15 years from now, chances are it's going to be worth more than it is today, regardless of what happens over the next 2, 3, 5, or 6 years." And so those are the conversations that we need to be having to help people get through their concerns and their fears, right? People have concerns and fears all the time, and usually they're on the surface. And it's incumbent upon us as professionals to help them go a little deeper and really, really look at those and see what is the best move for them, or the best decision. And that's where good experienced agents, have an advantage.
Yeah. Hey, Brian, let me pose this to you, because I get this from a lot of my friends, and people call, all of us get those calls from our friends and family, because we're industry experts, right? I get this one. I'm going to wait for the market to come back. And I think folks say that, and they are expecting you not to ask the next question, which is, what does that mean? But tell me what you do when you get that call from that person that says that.
Well, so when it comes to real estate, right? Real estate is primarily needs based, right? I mean, at the end of the day, people are moving, buying, and selling for a reason, right? And so they emotionally get tied up into the nuance of the market. They want to play, market predictor, and they got their little calculator and things like that. And those are emotional reasons, but usually there's very logical reasons, right? And like Chris explained, and if you look at like the seller's market per se, at the end of the day, there's very logical reasons beyond the emotional aspect that dictate what a home sells for, right? And that is the inventory, the interest rates, the curb appeal, and the variety of things. It's really about building a bridge between the emotional sort of disconnect, or the emotional barriers, into, okay, what actually makes sense, right? And when, at the end of the day, real estate, renting is not necessarily going to get any cheaper. Real estate, you have a tremendous amount of tax write-offs and advantages to owning real estate. There's a lot more stability in that. And then there's a need for that, right? So we focus on, kind of bridging that gap between the emotional hangups and then the logical reasons to move forward, when it makes sense, right? And sometimes for some people, it makes sense not to do anything, right? It sometimes makes sense to hold. But yeah, we try to focus on that.
Chris, what do you say when somebody says that, I'm going to wait till the market comes back?
Well, there are a couple of things. So number one, we have to look at the whole situation, right? But it's like, why were they buying to begin with? Were they buying just because they wanted to, or do they need to, or is it really an option? And if they do hold, what's their option? Are they, do you have the home that they already own? And, if so, then it's a different conversation than if they're renting a home. If they're renting a home, then we look at, okay, well, let's look at, the difference between buying and renting right now, and see over the next few years which one you're truly going to be better off with. If they own a home, say, gosh, I want to wait till the market comes back. Well, first of all, what does that mean? Are you saying you want to wait till prices go up again? And if so, how much? Well, we want to wait for prices to go up, another 10%. Okay, well, let's look at that. You have a $700,000 home that's going to go up. If that happened, it would go up $70,000. And you're going to move to an area that's more expensive, where you're going to spend $1 million. If that goes up 10%, you're now, that's $100,000. So the spread has actually widened. Your situation has actually gotten worse by waiting for that, versus doing it now, or doing it, whatever time makes sense for them. So it's really a case by case, but it's being able to have deeper conversations and not have, do what most new or inexperienced agents do, which is say, okay, I'll check back with you, versus asking more questions and really help someone think through it. It's what I mentioned before. People have surface level concerns. Like, I'm afraid the market's going to go down. I'm afraid I'm going to overpay. I'm afraid this, I'm afraid that, whatever it is. But then really helping them see, like, is that a valid fear, or is there something that actually makes sense? And it's incumbent upon us as professionals to be able to educate them and have those conversations to help them think through it. And to Brian's point, look, sometimes it makes sense for them not to buy or sell, and which is okay. And that's if we help them come to that conclusion, then we've done a good thing for them.
Yeah. Honestly, we've seen a lot of lenders, our big thing is helping lenders pivot into purchases, right? So we establish their sort of consumer direct or retail real estate arm. We've just seen a lot of lenders who now recognize the need to do that, right? I mean, before it's been, call me later, call me next year, I'm so busy with refis. Now it's, I need to get into purchases. I need to move forward with this. And there's a lot of reasons why. And I think that segues nicely into sort of kind of the next slides and presentation that we're going to regarding the marketplace. So a lot of this is, what we've been talking about, what we've played into is not only the specifics associated with, kind of what we think, but sort of like a larger demographic explanation, right? In the sense of that there is a shift within the real estate mortgage banking servicing space as a whole across the country that lenders and banks and real estate agents are having to adopt to, right? It's not sort of like a nice to have, but sort of a requirement for moving forward, somewhat based on COVID, but largely based on just consumer trends, and we'll go into that. So 95% of people start online, right? So if you're going to go buy a house, you're going to go on Redfin, you're going to go on LendingTree, you're going to go on Ojo, you're going to go on Realtor.com, you're going to go on all these different sites, and you're going to essentially expect somebody to walk you through the entire process. No different than whether if you went to Amazon or whether you bought something online, you just sort of expect it to show up, right? You go to CarMax, you buy say I want to view this car, you go and they have everything sort of situated for you. And so as people going online that are not real estate professionals, that haven't been in this business, they really expect a fully orchestrated experience from start to finish. The primarily driver for that is the millennial population. So I'm a millennial. I know a lot of millennials. The first time home buyers are just starting to age from the millennial population, right? So that age group that's 25 to 35, 36, 37, they're forming families, they're having kids, they're purchasing properties, and you've got 10 years of tech savvy, online, eco-friendly, aware, vegan millennials that are going to be looking to purchase a property, start online, and expect a fully orchestrated experience. Most of these are going to be married couples or single females, right? So if you look at the vast majority of purchasers are, almost 80% or 80% are married couples or single females. And so why is that? Stability, right? So when you think about renting, it's, your landlord can come and say, no, we're not renewing the lease, or hey, I want you out of here, or hey, I'm changing. With buying, it's very stable, right? So you see a lot of single females, single mothers, as well as married couples that make up 80% of your population. And then it's a global marketplace of lead aggregators, right? So if you think people online, they're going on these different websites, they're going on ojo.com, they're going on realtor.com, they're going on Zillow, they're going on LendingTree, they're submitting their information, and they're saying, hey, I'm right in the middle of buying a house. Those consumers are essentially broken down into two categories, where you have your mortgage first consumers, right? People who are interested in getting pre-qualified. And then you have your real estate first consumers, people who are interested in getting a tour request, right? So it's, hey, I'm going online, I want to do a tour of a property, and or I want to get pre-qualified, right? If I am interested in getting pre-qualified, I go and talk to somebody, at United Wholesale, like Vince has lined up. And then what's the first thing I'm going to need after my pre-qualification? A real estate agent to go out and look at homes, right? If I go out and say, hey, I go to ojo.com, I submit my information because I want to do a home tour request, right? Chris sends it over to our team. Once I figure out what type of property they want to see, when they want to tour it, the second question I'm going to ask is, are you working with a lender? Do you have a pre-approval request? From that point, there's parallel paths that gets established with these parties, right? So those parallel paths are, what are the appraisal, finding the house, getting the underwriting done, they need a title commitment, all of those things. That doesn't change regardless of what lead aggregator you work with, right? And so here's an example of, if you went to realtor.com and you submitted your information for a home tour, they have information, on getting pre-approved, right? If you went to Zillow.com and you sent your information on getting pre-approved, they have information on requesting a tour, right? These lead aggregators are playing with both sides of the fence, in the sense of, you really have the option to get a tour or a lead, or a pre-approval. And then the question is, what happens after that, right? And that's where, as a professional, you really start to see, and Chris, we don't have to talk about this too much, but you really start to see that consumer direct lenders recognize this, right? The larger lenders recognize the need for both a dedicated real estate arm associated with the with the lender. And Chris, you were at, Loan Depot Mello for some while. Maybe talk a little bit about like the consumer and what they're expecting, and, sort of how they're, expected to be walked through this process. You have a unique sort of perspective from that.
Yeah, so it depends on the site that they came through. If that consumer came through a mortgage first site, LendingTree, Bank Rate, rate table, a pre-approval call to action, then their expectation is that, and they are seeking financing first. So that process for that consumer is get them immediately in on the phone with a a licensed lender, get them pre-qualified, pre-approved ideally, and then connect them with a real estate agent within whatever network they're working with to help facilitate the home discovery, search, and purchase process, and working as a team between that lender and that real estate agent. If they were seeking real estate first, if they were on a search site and the call to action was to see a property or to get more information for the property, then it's connecting them with either answering their question if it's a question that needs to be answered, or if it's appropriate, connecting them with a real estate agent. And to your point, Brian, seeing if they've gone through the pre-approval process yet, and if not, if they're open to it, then connecting them with a lender on a parallel path, giving them the option to do that first, But most of them, since they came in on a property, are probably going to want to see the property and not want to wait. But many of them will be amenable to going down parallel paths.
Yeah, we're talking about these parallel paths, you guys. I mean, if we, I would think that we would want to see somebody come to us being on the realtor end of this with already a pre-approval. Does it matter?
Yes and no. Yes, if I put on my agent hat, if someone's going to introduce me to a consumer, especially if it's a lender, then yeah, I want to know that they're pre-approved, right?
Sure.
That informs me on how I best can help them, or if I can help them. If not, it doesn't mean I don't want to talk to the person, but I need to know either way, so I know how then to direct it. And if that source of that business was a lender, then I need to know, okay, what's the process for me to connect them with that lender or back to that lender? If the source was a different source, was not the lender, then I'm going to do what I normally do, is say, hey, Mr. or Mrs. Buyer, so we don't put the cart before the horse. Let me introduce you to my lender, so we make sure that, number one, you can do what you want to do, and we know, what parameters are going to work and not work, what type of loans are going to work and not work, and what price range we need to be in, so when we find the property that you fall in love with, we know that you're not going to be disappointed because we find out that you can't buy it because of your finances or because of the lender.
Yeah, and I've seen recently a couple instances close to me is that I think people don't really understand how much they can. They don't want to overextend themselves, but they don't understand how much they can qualify. I think it's a little bit, I mean, a little cloudy for them. Brian, do you see that?
I was going to say, I'm sorry,
sorry,
Brian, just real quick. I just, as an agent for my entire career, people have underestimated what they can qualify for. Most people can qualify for more than they're comfortable or more than their comfort level.
Yeah, and the comfort piece comes into play too. Brian, expound on that.
Yeah. So, Chris, Vince, great questions, great answers. What we see is there's a little bit of negotiation, right? So we take in leads both on the mortgage side and the pre-approval in the home tour side. And to Chris's point about, selling them on that house and selling them on that dream house, you have people who are, initially really interested in figuring out, what they pre-qualify for because they're unsure what they can qualify for. They've never bought a house before. They know that it's something that they need to get done, and they're just sort of getting started in the process. Some of them end up losing interest. They kind of get the paperwork, they get kind of the sticker shock of the whole process, and then getting them over to an agent to then say, hey, let's go look at some properties. Let's go tour some homes. We can, let's find you a house. Sometimes that warms them up to, okay, I can actually do this, right? I can find a house that I want. This is, these are real people that can help me walk through the process. And we sort of play them both off each other in the sense that, getting the hard numbers on what's my mortgage payment going to be, what does it actually look like? What can I qualify for? And then sort of running it up against, here are some homes for sale in the market area that I would actually like. And then playing kind of tandem off both, right? Of, hey, here's some homes that I like. Here's a mortgage options that are available to me. Here's some homes that I like. And then back and forth in that team-like fashion is the most effective, because what you see is, the home buying experience is very emotional, right? And I always joke, not joke, but they statistically say 75% of people cry during the home mortgage process, right? Or home purchase process, right? So,
It's a big deal to people.
It's a big deal. It's a big deal. So if 75% of people cry, it's a very emotional. So you have to really tie them into both the idea, like, this will be good when it's over. It's a lot of work. Let's get you sold on a property. Let's get you finding out, looking at homes. And then, we'll work out the financing, as long as they can meet the basic qualifications, like, credit score, they have a job, right? You can kind of filter them out, that way as well. But we try to run parallel paths, right? We try, and we kind of play them off each other a little bit too, in the sense that people come back, right, after they've had an opportunity. So one of the things, just, Vince, just to I don't want to hop on. So the timeline, right? So one of the things that is huge and why parallel paths are important is, unlike your traditional, mortgage loan refinance is kind of over with and done in 30 days or 60 days. The home purchase process takes a long time, right? So while they're out looking at homes, you have a situation where it's not multiple days, but multiple months. And especially if somebody's moving or relocating, I mean, it could be 6 months, a year before they finally get a chance to find the house and come over, et cetera. So during that time period, you have a lot of back and forth. You have a lot of situations with the mortgage pre-approval, where there's the pre-approval expiring, whether they lose contact with the loan officer that they originally talked to. And then also with the agent, the homes that were available a month ago are not at all available now, or the ones that you would want. And, 2-3 months from now, you have a different market rate environment. You have a different homes that are available, and you really have to focus on that engagement of, okay, what is this buyer interested in now, right? Like, is their pre-approval expired? They need to re-up, right? Is there a program that came out that they don't know about that I can call them about? Is there a home for sale in the market area now that they've always liked that I can sort of, put in their face? Because at the end of the day, it is a 3 to 6 month process. And then during that time, it's not like you're the only person you're talking to. And this is something that, a statistic, I got one of these from the Keller Williams book, and then another one from Blend Statistics, Chris. So Chris knows all about Keller Williams. Buyers don't have just one agent, right? Generally speaking, they have multiple people that they're talking to, right? And that could be from a website submission, right? They went on realtor.com, they submitted their information, that got sold off. They went on Zillow.com, they submitted their information, that got sold off. They got on some blog or some listserv that they're buying a house, so now they're getting called by multiple people, right? So they're in a situation where they're talking to one agent, but then also that agent is in the best position to recommend financing, right? In the sense that ultimately, as the lender, your guys, issue the pre-approval, say, hey, go out and look at homes. That agent is in the car with the buyer, in the houses with the buyer, in the basement with the buyer, in the, living room, walking around, the going to Starbucks, kind of thing. Yeah. And the relationship with the lender is almost irrelevant at that point. Yeah. And so you have a combination of saying, okay, well, it's going to take, 2 to 6 months for me to buy a house. They're talking to multiple agents. They are talking to multiple lenders. So I've got to have a situation where I have all the information on pre-approvals, all the information on the homes, and then also have an agent that's on my team, right? Because if they're not on my team and they don't know who I am as a lender and they don't know that I can do a good job, well, they're going to have their local guy, like Chris said, and just let them use, right? Yeah. And so we found, knowing and understanding this is super important in the sense that at the end of the day, and I'm going to, kind of close out with this and then turn it over to Chris for some stuff. At the end of the day, what a modern mortgage real estate sort of company looks like is sort of this, right? And this is like as macro as I could possibly get, in the sense that you have pre-qualified leads and or home tour leads that need to be paired up with an MLO or a real estate agent, both sort of in parallel. We went into a little bit why, we do mortgage pre-approvals and home tours. And what's funny is we have some people who say, oh, I'm not interested in the pre-approval anymore. Just get me out looking at homes because they got sold on a house. And then we circle them back to the lender, right? And then we have home tour requests that say, oh, that's great. I need to view this property, but I also am interested in the lender. We circle them to the lender. At the end of the day, generally, it's parallel, right? And then, from that, you really need to operate 7 days a week, right? Buyers are out looking at homes on the weekend. right? That's when most of the pre-approvals and the commitment letters or the, hey, I need to make an offer. That's when all the open houses are being done. Most people work during the week. Some sort of service level integrations and automated engagement processes from the lead aggregators, some CRM and follow-up system, and then your preferred service providers, whether that's a lender, agent, title company, you kind of need everything lined up. And within the purchase market to effectively compete, not only do you need to have the agency products, but also be able to speak to the down payment assistant products in the sense that everyone thinks there's free money, right, at some level, right? And so just being able to speak to them, and then also having the dynamic web presence, right? So like, do your online submissions work? Do you have a built out Zillow profile? Do you have a built out LendingTree profile? Do you have your built out Realtor.com profile? Can the people find you? Do you look like an agent or a lender that somebody would want to do business with? And do you have all the pieces of those kind of working together? You can tell the companies who have spent a little time and a little money on making their web presence and their engagement and customer experience good versus the ones that have just sort of chalked it up to, hey, call me when you're ready. And from the millennial buyers and the online buyers and the sort of winning in the real estate purchase market, the, hey, 9 to 5, 5 days a week, just isn't going to work. Since you guys had some stuff you want to talk about with just sort of growing the purchase pipeline and things of that nature?
Yeah, before Chris goes, because I think he's great to really speak to that. Kurt Nielsen was on the Q&A, and he made a really good point. The difference between a pre-qualification and pre-approval. And Kurt, we didn't mean to use those synonymous with each other. Pre-approval typically is somebody that's been fully underwritten at a lender and that's as good as gold, right? And a pre-qual means, hey, this is probably what you can qualify for, is typically in our industry. So, and Kurt really points out, using that pre-approval to differentiate yourself as a lender when you're sending your buyers out to market, to compete with these cash buyers and things of that nature. Thanks, Kurt, for the comment. I don't know, Chris or Brian, if you want to comment on that real quick, but it was more of a statement than a question, I think, from Kurt.
We, as an agent, you want someone who's pre-approved. Now, across the lending industry, the definition of a pre-qualification or even a pre-approval does vary depending on the processes of the lenders. Agents understand that, consumers don't. But yes, there's a big difference between me having a conversation for 10 minutes and the lender saying, well, based on what you've told me, you should be qualified for X amount, versus running my credit, verifying my employment, verifying my income, verifying my source of down payment and all those things, and then issuing a pre-approval.
Sure. But getting back to growing your pipeline, Chris, you were going to, Brian kind of segued that to you to kind of maybe speak to that. Give us your thoughts on the pipeline piece of what people are doing.
Yeah, it's probably easiest for me to answer or address that separately from an agent's perspective and a lender's perspective. From an agent's perspective, listings are always king, right? You got to list the last, you got to control the inventory. He who has the listings win, right? We know all the old adages, and that focus never changes. Again, what does change is the conversations we have, and as the rate of sales slows down, and likely the number of sales slow down, and the number of agents continues to climb, which it always does because it lags behind market shifts, then the question becomes, how do we get our unfair share? And so that means that we have to spend more time on lead generation. And lead generation could look a lot of different ways, right? It could be more referral sources, right? More affiliations with companies that were on that graphic that Brian shared, that the aggregators. It could mean more specific things we're doing to generate leads, whether it's door knocking, cold calling, expired listings, for sale by owners, more social media and more effective social media advertising and retargeting, in our social networks and in lots of things, right? We're to generate more leads. And then it's all the people that we've ever touched or done business with, and making sure that we are providing value to those people and deepening whatever relationship we have, right? The relationship could be a deep one already. It could be someone we sold their house for them last year and helped them buy a house. But if we don't keep deepening that relationship, when a life event happens or something happens, they need to make a move, it's not automatic that they're going to come to us. In fact, it's less likely now than ever before because of all the platforms that are out there that are making offers directly to consumers. So that's from an agent's perspective. From a loan officer's perspective, I'll talk a loan officer versus a mortgage company, right? Mortgage companies have, I'll speak to both very quickly. Mortgage companies are all focused now on what can they do to capture more purchase business. And if they don't have a consumer brand or a direct to consumer brand, then they are really at the mercy of two things. One is lead aggregators and where they're getting leads and the quality of leads they're getting, the amount of leads they're getting. And then the other is agent and broker relationships. Do they have a retail presence out there, and is it an effective one? And what are they doing to build that presence and to build those relationships? And for the mortgage company, in that side of the business, they are dependent upon that retail loan officer who's out there in the field. As a loan officer, if I'm a loan officer and I'm out in the field, then I'm looking at, okay, I'm maybe not as busy as I was, because any refi business that I had going along with my purchase business is gone. Now I'm solely on purchase business, and how am I going to increase that business? How am I going to provide more value? And those things go hand in hand, right? The way we get more business is by providing value. So again, it's how can I meet more agents? How can I differentiate myself? Is it through lead opportunities? Is it through platforms that I'm a part of that I can bring value to an agent? And the highest value to an agent is a transaction, right? Or a consumer that's going to buy or sell at some point in the future. And then how can I deliver more value to the partners I already have? What can I do to speed up the process? What can I do to partner with them to help create urgency? What can I do to partner with them to help educate the buyers on the ones that are thinking about putting it off or putting things on hold or waiting to see what's going to happen?
Yeah.
How can I be more proactive in those conversations and teaming up with my agent partners to help more consumers make the right decisions?
Yeah, I see the folks on social media, and I get the luxury of seeing behind the scenes how busy they are, and really truly they're available 24/7. They're letting people know I'm available, via Facebook or Instagram or LinkedIn or whatever. I'm available at Saturday. It's I'm in the office till 3, but available till 8. You know what I mean? And it's that constant. It's like ping, ping, ping. You know what I mean? They don't give up, and they're busy for a reason because they let people know they're all in. So
yeah, and look, at being available is or will become table stakes. It's what are you doing over and above that to really bring value to your agent partners or to grow your network of agent partners. And that's where we'll see the separation from the great ones from the good ones.
From my perspective, at the end of the day, like, screens aren't going anywhere, right? Like, 5 years from now, is there going to be more screens or less screens? Is there going to be more online or less online? Right. And, if I'm looking at, whether it's social media or whether it's, partner with companies like Chris's at Ojo or, working with the other lead aggregators, it's all online, right? And so, from my perspective and my vantage point, having a very built out social media presence is a must. Having a built out Instagram and Facebook and LinkedIn presence is a must. And then also having relationships with the lead aggregators, right? Because at the end of the day, it's not necessarily as much as it is about the leads, as much as it is about the process to intake the leads, the engagement of the consumer, the consistency in which you're doing so, and sort of like the organizational structure to make that work, right?
Sure.
If you look at your traditional retail company, let's say mortgage lender or self-producing real estate agent, if I called their office, like, would they have a secretary? Could they pick up the phone right away and take in a new buyer application or a new, pre-approval or a new seller application? Or would it be up to like, well, Bob's not here, let me call you back, kind of thing.
Sure.
And those things make a big difference on the customer experience. And so what online forces you to do and what leads forces you to do when you pay for them is have all that lined up, or you're just going to waste all your money.
Right.
And so I would really venture to say, like, online, getting that built out as robust as possible, because it doesn't, Vince, to your point, it doesn't matter which way you skin it, right? Where you do a dynamic social media, a dynamic Instagram, a dynamic Facebook, TikTok, I've even heard of, or whether you buy leads, right? It's all online, social media presence, list management, things of that nature. And then I just think it's not going anywhere.
Here's one from Marla Janik here. What tips or advice can you give if an agent or realtor says that there is low inventory in that particular area and refuses to take a deal? What better way can we respond to that? Either you, Brian, or Chris, want to take a shot at that?
So if I understand it right, I think it was probably a lender asking the question, and they have a referral for an agent, and the agent saying, "Hey, there's no inventory."
Yeah, that's what it sounds like. Yes.
Yeah. So a couple things. Number one, the no inventory problem is and will be cured over time. And number two, it's going to come down to price point. So we have to understand and really ask the question to understand, is it truly an inventory issue or is it a price issue? Because if you give me a $200,000 buyer in San Diego, that's not really an inventory issue. There is nothing in that price range that I can help them buy.
Yes.
Now, if it's a $800,000 buyer and they want to be in a neighborhood, there's very little inventory. Hey, I'll take that all day long because I will go out and find a property for them. I'll find someone who's been thinking about selling, who's getting ready to sell, who had been selling before and had given up or changed their mind. I'll find the properties. So I think we need to look at, okay, is it truly an inventory issue or is it a price point issue? And if it's a price point issue, there may not be anything you can do about that.
Lead aggregators that you guys suggest that we got another question that just came in that you've heard of that you're partial to?
Well, so if it's an agent asking, then any of the platforms that will introduce you to consumers. We have one, Ojo Labs. There's HomeLight, there's Sold.com, there's Referral Exchange, there's Referral Connection, there's Upnest, the list goes on and on and on. As a someone who's looking to purchase leads, then you have on the real estate side, you have Realtor.com, Homes.com, Zillow Premier are the larger ones. Home Finder is a smaller one. On the lending side, we know who the big ones are: the Lending Trees and Bank Rates, and then the Zillows and the other portals.
Gotcha.
Yeah, and just to kind of piggyback on that, right? Because we take in leads from all the lead aggregators, right? So we work, kind of the relationship of Real Estate Connection as we work with all the different lead aggregators. Right. We found value in the brands, right? So brands like Ojo, Realtor.com, Zillow, Lending Tree, the big ones, the ones that have invested money and resources and have a good team, generally have better buyer, what we call like intent, in the sense that, you can go on Google or Facebook and you can find somebody to do, kind of landing pages and SEO stuff for you, and you can generate activity or names from that, but maybe 1 out of 1,000 was actually interested in buying a house and the rest are just kind of surfing the net. Whereas when we work with the other lead aggregators like Ojo Labs, like Chris Group, Realtor.com or Zillow, the intent of the buyer is much better, meaning like they're actually really interested in buying a house. They have a legitimate question about getting a mortgage pre-approval, and it's something of value. We've just sort of seen that there's a reason that they're popular per se.
Yeah. What are the top two things that an agent needs from me? How can I differentiate myself, and really, how do you approach these agents when they already have people they've been working with? Maybe Chris, take that.
Yeah, so I'll answer it two ways. If it's someone you're already working with or you've had the chance to work with, then the differentiation is going to come from the value that you add. And what is the value you add? Again, it could be helping them source new business. It could help them going above and beyond of really working as a team. As my lender, I want you saying to every consumer that you talk to or that I introduce you to, wow, it's really lucky that you ended up with Chris. I don't know how you met him, but he's the best, and there's no one that's going to work harder to get you what you need or when you need it. Keep reinforcing using my name, those type of little things that have a big impact, because that third party endorsement. If it's someone that you're trying to get your foot in the door, don't have the expectation that they're going to change and start using you. What you're looking for is an opportunity. You're looking for an opportunity to be their backup lender. You're looking for an opportunity because their lender is going to drop the ball at some point, or something's going to happen. It always does.
Yeah.
Or isn't going to be available. You want to be there on deck when that happens. Now, how can you even get the conversation? How can you get the door opened with them? Hey, one might be telling them or bringing them one of these lead opportunities that we've discussed to them, right? That's high value. That's what every agent wants is to learn about more opportunities. So leverage these platforms for that purpose.
Yeah. What best generic practices can you share when it comes to following up on leads that don't seem quite motivated in the beginning, and could not follow through? How often do you follow up? How do you get them back in the game?
Yeah. So it's important not to assume anything when it comes to lead follow-up. The name of the game in lead follow-up is being persistent and being consistent. If you do those two things, you'll win more times than not. Now, if you add to those things, providing value, calling for reasons, and hey, not Vince, I'm Vince, instead of saying, Vince, hey, I'm calling to check in, see how things going. Has anything changed? Nah. Hey, Vince, I'm calling you because you originally had talked to me about a property over on Anywhere Street. And I just want to let you know that 2 more came on the market. One sold immediately. The other one looks like it's going to sell. But I think I know of some others that are. Is that still an area that you're considering? Right. So I'm asking questions that aren't directly, hey, are you still on the market, or when are you going to be ready to buy? But I'm asking questions, the answers to which will help me understand, if there's motivation there or when there is. But the biggest mistake agents make is they give up too early. Don't stop following up until they tell you, hey, don't ever call me again. I hate you. And or you find out they already bought or sold. And then, there's a saying that we use a lot. There's no bad leads. There's always bad follow-up. And bad follow-up usually means a lack of follow-up.
I love your consistent and persistent. Here's the last question that we got. If a buyer's working with multiple agents, how do you remember yourself and stand out from the rest?
All right, so that comes down to being able to effectively deliver our value proposition. You have to be able to answer the question, what do you do that's different? Or why should I use you instead of someone else? And your answer to that has to be one that you can deliver to someone and say, hey, any agent can help show you homes. Here's some things we do that are different, that cause more people to use us than other people. Number one, we're going to not wait for homes to come on the market in Shumtree. We're actively going to look for properties before they come on the market. Look for people that are thinking about selling so that you're not competing with the rest of the world. We're going to do this. We're going to do that. I partner with this lender. Whatever it is, whatever your value proposition is, it might be your integrity, it might be your honesty, it might be your availability, it might be your responsiveness, it might be your tactics. Whatever it is, you have to be able to communicate that and then have them connect the dots to how that will benefit them.
Market's changing, things are going online, and it's time to compete, right? I mean, right now it's just you're seeing a lot of people starting to scramble. You're also seeing a lot of guys who have been positioning themselves for the last couple of years for this marketplace, who are getting busier and busier by the day, and then others who are, not ready at all, right? But the reality is that the purchase market's going to be prevalent for probably the next 5, 6, 7, 8 years. With the millennial population buying a house, they're going to be online, and it's a big opportunity for the right lenders and the right agent teams who just want to help people buy houses who are online.